anniversary of Immutable. So now we get to look at monthly candles. Monthly candles, we have a whole month of data that's going to give us insight into what's likely unfolding here. So look at the last month on Bitcoin. The month of March on Bitcoin was extremely bullish. You closed well above the important long-term moving averages, and you also closed above the 236 Fibonacci. That was, the jury was out on that until like the literal last second. It's like, wow, that says a lot about the strength of Bitcoin here. You were consolidating below the 236. You ended up closing a monthly candle above it, opening the month of April above it. I mean, that's about as good as it gets. I mean, that's what you want to see. Even if we do see some pullback here, there is some precedent to expect that the 236 may end up being support for Bitcoin in the year of 2023. Obviously, there could be some retracements back down, maybe to test the moving averages, but that would obviously be a major buying opportunity, because what I'm saying is that the 236, it's now showing that it's not going to be this huge barrier. But to be fair, I mean, that level, like the 236 is confluent with major resistance for Bitcoin right here. Like it was support all the way back here. Look how supportive that price level was. It's right around 30,000. It's between 28 and 30,000. Like that was huge support back here during the bull market in 2021. It was a huge breakout level for the bull market at the very beginning of 2021. And that's where the market collapsed. When it collapsed, during like May and June and all that FTX stuff, it was around that 30,000 level. So we're still below the 30,000 level, but we're closing strong below it, potentially consolidating below it to gather up strength for a move to eventually pop above it. So a pullback would make sense, but I would see that as consolidating strength before breaking above. So let's look around here, because this is interesting, man. March was super interesting. Let's take a look at the NASDAQ here. Look at the freaking monthly candle on the NASDAQ, kid. Oh, son. Like, look at this thing. Look how much positive volume got on this thing. Look at this. This is the highest monthly close we've had in, like, let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months, kid. Highest monthly close in 10 months on the freaking NASDAQ, son. That is a signal, okay? That is a signal. No denying that signal. But obviously, there are certain things we need to be cautious about. So let's talk a little bit about this bank's situation here, because this is like hanging over our shoulder here. Like this is like a dark cloud over like what seems to be a lot of bullish activity here, but there is a dark cloud lurking. But I will say in the short term, like maybe the very short term, maybe like the month of April, it looks like maybe there's going to be some clear skies here. So first of all, let's just kind of drill down on the XLF, because look at the monthly candle on the XLF. Like compare that to the NASDAQ, compare that to the Bitcoin. It's like, what is going on here? They're literally moving in the opposite direction. But that's only what it looks like on the monthly chart. So I want to actually drill down a little bit here on the XLF. Remember, XLF represents the financial sector. This is all the big banks, the regional banks. Like this is all the banks. Look at this thing on the daily chart and see what you see here. See if you see the same thing that I'm seeing here. Now look at this, okay? Daily chart here, right? You are closing the week above the 200-week moving average. This, to me, potentially looks like a bottoming structure, right? And nobody would expect that, right? Because they're thinking, oh, the banks are going to collapse. Like we have reason to believe that interest rates will continue to rise. That's what the Fed is saying at this point, at least. The Fed is saying they are projecting that they're going to continue to raise rates, even though the banks are severely under pressure. But in spite of that projection, look at this. To me, this looks like a bottoming structure here. This literally does look like a bottoming structure. I compare it to this October 2022 bottoming structure. Notice how it didn't even fall below the October lows, right? This looks like there's, this is a range-bound market for sure. You can definitely see clearly defined range-bound market, but it looks like maybe you're bouncing off the bottom of that range, about to test some of these short-term moving averages, maybe before a potential major downside move. Now, that's getting too far ahead of myself, but what I'm saying is in the short term, to me, it looks like the financial sector might be due for a pretty significant bounce, and that would all be a tailwind for the other markets, crypto, NASDAQ, S&P 500, right? If there's upward pressure on the financial sector, that's good for everything. So it's one of those deals where it's just like you look at the NASDAQ and you're thinking, oh, like, when is the rug going to get pulled out from under us? Because how could this possibly be so bullish considering the economic backdrop? And it's like, whoa, wait a second. The XLF doesn't really look that bearish. Yes, it just had an extremely bearish month, and I would say the year of 2023 so far has been very bearish for the financial sector, but nothing goes down in a straight line, kid. And to me, this looks like a bottoming structure. To me, this thing looks like it's going to do a little bit of bounce before potentially, a further fall that could be really horrifying. So to me, in the short term, I'm looking at this thinking like, looks like we may see some upward momentum in broader markets. So that means continuation to the upside for crypto, continuation to the upside for the NASDAQ. Now, here's where I want to get a little technical on you guys. I've been talking about bonds, and you got to realize how important bonds are to this whole operation. So what we know, we discussed this last week, but what we know now is that many of the banks in the United States, the banks that are represented by this XLF ETF, they are holding bonds, right? They're holding bonds. So we got to know what the value of bonds are in order to assess what we think the financial sector is going to do. So how do we figure out the price of bonds? Well, one really basic, simple way to do that is just look at the TLT. So the TLT represents the spot price of bonds. I know I'm repeating myself, but it's good to repeat myself. These are important things. So the spot price of bonds goes up when interest rates go down, right? We talked about the mechanism of that. You can go back to last week's video if you need a review of that, but you got to understand that the basic mechanism is that the price of bonds currently in existence rises when interest rates go down. That's a basic supply and demand mechanism. Obviously, you want a bond with a higher interest rate. So when interest rates are coming down, that means all of the bonds in existence become more valuable because they have a higher interest rate relative to interest rates that are currently existing in the present moment. So what do we see on the TLT? Well, look at this monthly candle here. Green monthly candle, hugely positive volume here. To me, it looks like the value of bonds is potentially going to start some kind of bounce here. Doesn't mean they're not going to fail when they get up to these moving averages, but it looks like they're going to get a bounce here. So if the bonds are going to get a bounce and the banks are holding these bonds, that means the value of the balance sheet of the banks is about to increase, which supports the idea that the XLF might be due for a bounce. If the TLT looks like it's put in a decent temporary bottom here, then that corroborates the fact that this might also be some kind of temporary bottom. And it also is corroborated by the fact that nobody really expects that. I mean, if you look at any articles written in the past like 3 weeks about what's going on with the banks, literally everybody is screaming doomsday. Everybody. And markets bottom when people are screaming doomsday. So it's like, yeah, I understand crypto is like pretty euphoric here. I would even say that the NASDAQ also on the euphoric side of things. I mean, this is like, I guess you could even say overextended on a shorter time frame, but on a longer time frame, it's just getting started, right? So it's like, but the point is that even if the NASDAQ and crypto are getting a little bit euphoric, getting pretty frothy, that doesn't really matter, because if the XLF is about to move to the upside, then the frothiness can continue. Like the broader markets will be supported if the banking sector is actually going to be supported in the short term, and it's going to be supported by the TLT. Of course, I'm speculating. I don't know what's going to happen next week or next month, but you can't ignore that the TLT, representing the value of bonds, the spot price value of bonds, this thing looks like it just put in probably a decent bottom here. I mean, that's hugely bullish volume. That's like insider trading, right? That's literally insider trading is like buying this. They know what's going to happen. They can tell the future. This volume is not from your average retail investor. This volume is from people who know something. They know what's going to happen, right? So it's like, you got to respect that. You got to respect that the value of bonds may be coming to the upside. And that means that the balance sheet of these banks is about to increase. That means that the value of their stock is about to increase. And it looks like a freaking bottom, if you ask me. If you ask me, this looks like a bottom. So for all those fundamental reasons, besides just the visual factor, it's like, yo, this thing looks like it's going to get a bounce. That's going to support crypto to the upside and NASDAQ to the upside. It's like, yeah, okay, pretty good news here, at least in the short term. But then I think, a little farther down the road here, maybe thinking summer solstice, approximately around these times, I think something gnarly is going to happen, right? Because I do think that the Fed is going to stay tough. I think that's what they want to do here, because I think ultimately they are trying to wipe out more smaller banks to further centralize the banking system. So if interest rates stay on the rise, that will cause the banking sector to collapse. So it's going to get this bounce, and then later it's going to have a major collapse. That would put downward pressure on every market, no doubt, as a result of the value of the bank's balance sheet decreasing significantly because interest rates stay on the rise. Remember, if interest rates rise, the bonds go down, the banks are holding bonds, the bank's balance sheet goes down, the value of their stock goes down. So if the Fed stays tough, the banks will come under serious pressure. But the thing is, the TLT is telling us that either the Fed isn't going to stay tough or the Fed can't stay tough. I don't know which one it is, but the market is telling us that at least in the short term, and maybe that will become a longer trend, but at least in the short term, the value of bonds is getting a bounce here, and that means that interest rates are coming down. So the bottom line here is watch the TLT, right? So if the TLT is about to get some kind of bounce here, you better expect the financial sector is going to get some kind of bounce here. And then remember, there's no Federal Reserve meeting in April. The next meeting is in May. So if, banks are way up here, they're around these moving averages by the next Federal Reserve meeting, and the TLT is around these moving averages by the next Federal Reserve meeting, that could be license for the Federal Reserve to come out and just actually punch the market right in the face and beat it down as hard as they can. So remember, the Fed is putting pressure on banks when they are raising interest rates because the banks are holding bonds. So if the Fed stays tough, that's not good for the financial sector. But the market and price action at this very moment in time is telling us that the Fed is already reached their maximum toughness. It's unlikely that they can be any more tough than they already are without looking like they're just completely going in the wrong direction, because the market is showing that there is an increasing demand for bonds. We're really early in that stage, but this is one of those moments where it's if you're a trader, you obviously understand that this market can just continue to the downside. But the whole point is you're looking for trades at inflection points. The situation is, if you enter a trade on the TLT here and it does bounce, you'll look like a genius, right? But you understand that it can just continue to fall, and that's the risk that you're willing to take. The point is, this is an excellent entry in the event that it does move to the upside. And with this kind of volume and also this bottoming structure on the XLF, I'm feeling like, it's a reasonable time to expect that in the short term, the value of bonds are going to get a bid, and that means that interest rates are likely to be coming down for whatever reason, whether it's the Fed or whether it's supply and demand, something like that. So this is all positive for crypto. This is all positive for the NASDAQ. And it looks like April could end up being, at least it could start out as a pretty bullish month. Definitely could start out that way. But I think it could also be a really volatile month, where maybe it starts out really bullish and you get this huge candle to the upside that ends up just being an upward wick, which would make sense on Bitcoin because, as I'm saying, this is a super important level of resistance and support. Right now, it's resistance. It was support. So a classic situation would be you break above it, and then the candle just closes basically where it started, and you just have this huge wick on top. So if we take a look over at the DXY, let's get that story. What's going on here? It's is that telling us anything? Right now, it looks like it's in a relatively bearish consolidation. I think at this point, it's safe to say that the DXY is going to have a hard time closing candles above that 382. You've now had 3 months in a row where you can't close above the 382. It doesn't seem to me very likely that the DXY has really much upside, if any upside in it at all. So that's all positive for equities and cryptos. really just on a basic level, everything points to the Fed pivoting very soon. That's what it points to. And we know how that works, right? We know when the Fed pivots, we're going to get, face-ripping upside, raining money situation, but it's going to result in a major crisis situation here. So this year feels like it's going to be, a historically volatile year where maybe we're going to get some downside at some point in the year, but ultimately that's going to result in a major upside push that precedes some kind of crisis, some time of like October, Halloween type crisis situation. That seems to be what the case is, because all the signals are pointing to the Fed is running out of room to raise. Maybe they want to raise, maybe they want to talk tough, maybe they really want to destroy regional banks, but it's like they only have so much ability to manipulate markets with their language by saying we're going to raise interest rates, by saying we're going to destroy the labor market. That's just talk. Realize it's a blunt tool that they're using. They don't have precision instruments to manipulate these markets. They're just trying to scare people into doing what they want them to do. But then you look at the bond market, and the bond market is it's like calling their bluff. It's like investors, potentially large institutional investors, are calling the Fed's bluff right now because they're about to drive up the price of bonds, if I'm speculating here. So it's quite an interesting time. You got to be hedged, that's for sure, because no one knows what's going to happen. But, like I said many times, if you just were buying crypto this whole time, I mean, you're sitting pretty right now. I mean, you're pretty happy with the situation. You're probably wanting a pullback. And maybe you're going to get one because, to be fair, that would make sense. I mean, at this level of resistance right now, you would think Bitcoin has to pull back, consolidate before it's going to move to the upside. But you got to realize that on the monthly chart, look where the RSI is. It's crossing above that 50 level. I mean, we talked about the fact that this could be the C heart wrencher of a running flat correction and what that means. I mean, yeah, there's a lot of signals for the market to be moving upside in 2023, but we also see the early signs of the rate cutting, and we know what happens when the rates get cut. When the rates fall, the market crashes. So yeah, be on your guard, use hedging to your advantage, and white knuckle your cryptos.